Good evening and welcome to the fourth episode of Business PNG for the year 2015. Congo Coffee is one of Papua New Guinea's leading coffee export companies, involved in the coffee industry for over 20 years in growing, buying, processing, roasting and exporting. The company gives a glimpse about the relationship between small village coffee farmers and the coffee market. However, not all have profited from the revenues of the A-grade coffee exports. Government policies have not been aligning with the interest of small village growers. Business PNG correspondent Edwin Fidelis with more.
Just a few kilometers outside of Kundiawa town is the Congo Coffee factory, one of the largest coffee mills in the country with a strong export market. It processes and exports 7,000 tons of coffee bags and over 10,000 cartons of roasted coffee every year. Their coffee ends up in Japan and other European countries. Much of the coffee beans that come here are from small-scale village growers.
The whole factory?
I was given a tour by the factory owner, Jerry Kapka, around the factory. He explains the procedures involved in the coffee production line.
We have set this up to do very high quality coffee. And our very popular brand is called Lembari. And Lembari is the coffee we develop with our smallholder farmers. And it's become a very reputable and very high quality coffee we export exclusively to Japan.
The Congo Coffee factory has the capacity to process 8 tons of coffee every hour of operation. This is one of the new state-of-the-art coffee roasters that has just been put into operation a few weeks ago.
It is a semi-auto setup where a lot of the work is done automatically. But we have 1 or 2 attendants here only who can just attend to and be around to ensure that things are going okay, or things are going the way they're supposed to go.
The coffee beans are roasted and quality checks are carried out before they are graded, packed and delivered for sale. While the coffee market looks good, the factory owner Jerry Kapka is concerned about the recognition given to small-older coffee growers by the government.
It is in the last couple of years, last 3-4 years, you know, it has become a little sad to see that our people are, moving away from coffee. Not only in Simbu, but in Highlands generally, they are moving away from from coffee, because there's so much excitement about LNG and all this, and they're moving away. They're just excited. Do they really get the benefits? You see, and as a result, we are seeing people moving away. Production has dropped a little, quality has dropped a little, So, I think we have to stop it from happening. We have to stop it from happening, and there must be intervention. We have to get people back into their coffee gardens. We have to talk about increasing production and improving the quality of coffee at this place, because people are already shifting. Because they just get sacked up for with all the news they are hearing, and they are leaving the good things that they have been doing. So this is a problem we have seen.
PNG's coffee industry is kept alive by small-scale coffee growers who grow as little as 20 trees per plot in coffee gardens alongside subsistence crops. With near-perfect climate conditions, farmers are still faced with uncertainties surrounding unstable coffee price, poor infrastructure investments and middlemen wanting large cut of profit.
Coffee prices, like all other commodities, prices have been coming down in the last many months, and coffee is one of them. And prices have come down so low, and we really need government support here. The government has to come in and provide price support. I am very well aware there was a gathering in Goroka where the Prime Minister came. I was there at that time, and there was over 50 million kina committed, given for price support. And from that time up to now, I've not seen any price support. Wasted money.
Over the last 30 years, local producers, mostly in small-scale category, continue to receive less from their sale of coffee. Prices at the PNG's local coffee market are determined by international price. Over the years, PNG's coffee production and export level had dropped.
Of course, the screen size, these coffees are small, not the bigger kind. So the bigger the coffee seed, sometimes they do tend to attract a better price. But not necessarily, I find that bigger coffee tastes better. It's not necessary. Sometimes small coffees taste good.
The slump in coffee production and export over the years was largely fueled by unstable coffee prices that coffee growers have limited influence over. PNG's coffee production leans towards the buyer, putting it at a greater advantage over the seller. The coffee regulatory body CIC, after realizing the decline in the coffee market, began to introduce measures to encourage steady coffee production. Coffee export licenses were issued and coffee growers formed cooperative groups. It gives the opportunity to small coffee growers to avoid the middlemen who, for the most part, buy coffee at a lower price.
It is good to get our people together, and then you can have, better bargaining powers to get prices. But to do export, it is more technical. It is more technical. If we are really serious, if we really want to help our people, then we have to look at increasing the volume of production in this country. With 1 million bags that we have at the moment, at current prices, this coffee is bringing around 600 million kina. If we increase the volume from 1 million to 2 million, then it just instantly doubles that income, from 600 million to 1.2 billion. And this kind of money will make a lot of difference to the lives of our people.
All eyes are now on the government to come up with policies and measures that support the interest of small coffee farmers. Policies that aligned with coffee volumes, quality control and stability in coffee prices.
Coming up on the show, BSP to acquire Westpac's 5 Pacific Nation operations. Stay with us to find out more. Welcome back. Bank South Pacific Limited recently announced that they have entered into an agreement to acquire the banking operations of Westpac Banking Corporation in 5 Pacific nations for 125 million Australian dollars, which is approximately 243 million kina, a giant fit for the expanding Papua New Guinean company. In a bid to live up to its name and be truly a bank for the South Pacific region, Bank South Pacific Limited recently announced they have entered into an agreement to acquire the banking operations of Westpac Banking Corporations in Samoa, Cook Islands, Solomon Islands, Vanuatu and Tonga for 125 million Australian dollars, approximately 243 million kina. Completion of the sale is anticipated for mid-2015 and is subject to the parties obtaining necessary statutory, regulatory and third-party approvals.
The sale purchase agreement, and at this stage we've executed the sale purchase agreement with Westpac, which involves the acquisition of Solomon Islands, Westpac's operations in Solomon Islands, Samoa, Vanuatu, Cook Islands and Tonga. The sale purchase agreement is and does remain subject to the approval of each of the regulators or the central banks in those particular countries, and of course the Bank of Papua New Guinea has to approve as well as the host regulator, but involves the acquisition of the banking operations of Westpac in those particular countries.
The initiative is consistent with BSP's Pacific-based expansion strategy, which has been maintained since 2006. Since that year, BSP acquired banking and financial services businesses in Solomon Islands in 2007 and Fiji in 2006 and 2009.
The Pacific expansion strategy goes back many years now, and I think one of the originators of it was around the time of the merger with Bank South Pacific and PNGBC, and there was a lot of discussion and debate at that time as to which name should be maintained, and the board at that stage decided that Bank South Pacific gave an indication of the vision of the new bank to be able to extend its operations across the Pacific. That initially started with the acquisition of National Bank of Solomon Islands in Solomon Islands, and also the acquisition of entities' operations in Fiji in 2006 and 2009. To the extent now we're in PNG, Solomons and Fiji as a combined bank, our bank operations are bigger than Westpac and ANZ's operations as a combined operation. Further from that, we've always expressed our view that we wanted to see how we may well be able to establish our operations beyond those three particular countries, because we feel that adding these other particular countries of Samoa, Vanuatu, Cooks and Tonga in particular into the overall South Pacific Bank will give us the opportunity to provide the types of services and extend our facilities to those countries and broaden our operational capacity.
The country operations specified in this acquisition satisfy the geographic elements of this strategy. Moreover, as a business domiciled in PNG, the largest South Pacific island economy, BSP has developed a strategic interest to find opportunities and grow its presence in the economies in the region. The acquisition brings new customers into the new jurisdictions, skilled employees, and specialized processes and systems. It will also position BSP as a leading Pacific regional financial services business, maximizing future opportunities from PNG's growing long-term trade and economic influence in the region. Bank South Pacific's chairman and executive will undertake a program of pre-completion visits over the next few months to introduce BSP to customers and staff in those Pacific Island countries and make initial support representations to local regulatory authorities. BSP Chairman Costas Constantinou stated in a recent statement that BSP was pleased to have this opportunity to increase its commitment to the Pacific. He further added that this is a milestone transaction not only in the corporate development of BSP, nor only in the development of Papua New Guinea as an economic force in the South Pacific Island nations, but also a positive example of people of the South Pacific Island nations developing their capabilities in regional commercial and economic activities. When asked if this transaction was strategically placed in accordance with major upcoming events in the country, such as the 15th Pacific Games, where BSP is the official sponsor in a sponsorship deal that is the biggest in the history of the Pacific Games movement, BSP Limited CEO Robin Fleming had this to say.
As they say, timing in life is everything, but it's a coincidence that this is now being announced around the times of the Pacific Games. It's a coincidence that it is the year of Papua New Guinea's 40th anniversary. Equally, we've got the Pacific Islands Forum being hosted in Papua New Guinea later this year. So there's a lot of milestones which are coming together at the same time. We think that from Papua New Guinea's perspective, quite apart from the bank and our shareholders, the Papua New Guineans should be proud that the Bank South Pacific brand is going to be flying in these additional countries.
The bank has assets of approximately 16 billion kina, representing approximately 50% market shares in both loans and deposits. And now on to some news bites. The Independent Consumer and Competition Commission, or ICCC, recently announced a new pricing for taxi and PMB services in the country. ICCC Commissioner Dr. Billy Manoka said the rate is placed considering issues associated with the operation of running PMB services. Urban routes in Port Moresby will be 90 toya, while in Lae it will be 80 toya. Taxi services will see a maximum flag rate of 1 kina 70 toya and 2 kina 30 toya per kilometer as distance. For non-urban PMV routes, ICCC has determined slightly higher fares. The fares include turnoffs along the main highway into villages. Dr. Manoka said that there may be new routes that ICCC have not been aware of and have not included in the Gazette price determination. However, the public has not welcomed these changes openly, and the rate change has been rejected by motorists and the public in Port Moresby. Bus crews and taxi drivers say the new prices are not worth it compared to vehicle maintenance and the cost of business. In a statement, Dr. Monoko said all issues surrounding PMV operations were considered before the rates were announced. However, Commissioner Monoko urged all PMV and bus operators to comply with the rates or face legal action for charging excess fares. Air Niugini Chief Executive Officer Simon Fu recently announced that the airline will be reducing airfares for both domestic and international sectors effective this month. Mr. Fu said decrease in airfares is due to drop in crude oil prices on the global market, allowing the fuel surcharge to be reduced as well. He said most domestic travellers will see a reduction of up to 10 kina per one-way sector of the airfare, whilst on the international front, passengers travelling to Cairns, Brisbane, Sydney, Honiara, Hong Kong and Nadi will see a reduction of between $30 to $40. Mr. Fu further said the airline will continue to monitor crude oil prices, and if prices continue to drop, these savings will be passed on to the travelling public. And that's all we have for you tonight. For more business news, if you'd simply like to view this episode again, visit MTV online at www.mtv.com.pg/business, or to join the conversation, like our page on Facebook for daily business news, or follow us on Twitter at Business PNG using the hashtag Business PNG. Until next week, have a pleasant evening. I'm Leon Jarari, and this is Business PNG.